Good morning and welcome to the Amazing AI PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses when it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to founder and CEO, Paul Matheson. Good morning to you.
Good morning. Thank you, investors, for joining, new and hopefully potential new investors. We're here today to talk about an update on our digital asset treasury and our core business. Our company mission is to maximize upside and limit the downside. So this is an update on our last presentation. So excuse me for those who have heard the last presentation. I'll run quickly through that for the benefit of new investors and then get into the focus on digital assets. Our legal disclaimer that you should all read. In terms of our company, so I'm the founder, CEO, largest shareholder, and I also provide a debt facility to the company that is currently undrawn. I have over 30 years experience in the finance industry, originally in equities research, investment banking, and then in funds management, where I created a very successful 5-year structured derivative product using out-of-the-money call and put options. I made investors over 500% over 5 years, and from that ended up with a core shareholding base from Australia that have backed our current listed vehicle. We've recently added new UK investors who have liked our story and aiming to add new investors over time in the UK. The core of our business is lending originally. So originally I was lending brick and mortar in Australia with amazing loans, subsequently moved to the US in 2008 and have been fully licensed since 2010, lending out and fully regulated under the brand Mr. Amazing Loans. Since 2018, we've been involved in the digital asset space on a variety of projects, but decided to hold off in our public listed company until the regulatory environment was favorable. Since Trump won the election and other changes have been made in the UK and European space, we think it's a very attractive time to get involved. I set up the US company, as I said, in 2008, and it is 100% owned by the public listed company Amazing AI. I have a master's degree in finance and was awarded Ernst & Young prize for Young Entrepreneur of the Year with my previous success. We have a very strong management team. Neil Patrick is our chairman and runs our committees as independent, previously very involved in the lending businesses in the UK. Glendis is our GM and CFO who has been working on the US company since 2011, highly experienced. Chris Burney is our new sales consultant who worked at leading UK companies in selling AI systems across UK. And Ian, who's recently joined, is our global AI technology director with 35 years experience in developing AI and underwriting systems, including Sterling Bank and others in the UK. The corporate structure of the company is quite simple. So we have a holding company that is listed that, as I said, owns 100% of our US subsidiary, doing the lending for a long time. We have gross margins of 60% in this company, and I'll give a bit more detail on that in a minute. We also own 100% of Amazing AI Services in Mauritius that holds our digital assets via the world's leading custodian, BitGo, in the US. It also provides loan funds to the subsidiary and is expanding globally across many regions. Mr. Amazing Loans, to give some more context to people, as we didn't speak a lot about it before, people should look at our website, mramazingloans.com. Our philosophy is providing fast, fair and friendly loans, fully licensed in 6 states of the US, covering over 100 million people. We have very advanced technology with automation, scalability, and we're very unique and one of the first groups in the world to utilize open banking data or bank statement data directly from banks way back in 2012. So we scrape the data using AI and machine learning to pretty much automate the whole process with a final human interaction at the end. So it's very scalable. It means with our current infrastructure, we could scale up to 100 million of loans without adding any extra staff, which I think is a key thing for people to understand. In the past, we've lent out $1 million a month quite easily, which could be easily 10 million a month. If we were to lend out 100 million in our core business, we generate 60% gross revenue. So that would be 60 million of revenue for every 100 million deployed. On the basis of that, after all costs, we would make in the order of 30 million per annum, locked in for 5 years with our 5-year loans. So our business is very leverageable and scalable at its core, which represents 50% and a proportionate amount of our business. In addition, our customers love our product. We have 95% trust score, positive reviews. We don't charge any collection fees. We don't charge penalties. We allow people to repay their loan at any time without penalty. So unlike, as a basic example, where you had a lease over a car, as many of you would know, if you tried to repay that in a year, the penalties and costs would be enormous. For us, you could pay 1 week's interest if you had a need or a want, and then go from there. Come back another time, not pay any penalties and so forth, which is why we have a very positive Trustpilot review of our company. We've kept our product very simple, so it is $5,000 and $10,000 loans over 5 years. We're not offering, 5,001 or 5,002, so it keeps the process very simple, easy for people to understand. It's all about the affordability for the customer, which globally has been a very attractive proposition. As I said, we are lending at 40% to 60%, with our main current focus lending at 60% in the state of Georgia, where we believe we could lend in the order of £100 million a year, generating substantial returns if we have access to either the equity or the debt capital. In terms of the debt capital, we're currently debt-free. We have no creditors. I've provided a $5 million debt facility that we'll be shortly ramping up and using for this core lending business. In addition, we have Amazing AI Services that is not only the vehicle for our crypto or digital asset treasury, it is also the vehicle to sell our sophisticated systems globally into emerging markets, into UK, into US, into all around the world. So there is a huge potential there in that business that we expect to ramp up in 2026. That business does not have extensive capital requirements at all, and it is really utilizing the systems that we've developed in the US and will continue to develop. So we're looking at new additions such as digital lie detector tests for underwriting that we think would be very exciting to people, more automation and AI in terms of analyzing people's bank statements and leveraging up the overall position. So we'll be providing more news on that over the short term. In terms of the digital asset treasury, which most of you are probably mainly interested in today, we have rebranded it as the Digital Asset Treasury 3.0. We're not just involved in crypto assets as such. We can be diversified into multiple things, but the key thing is here, we've gained exposure to Bitcoin and we will gain exposure to other digital assets. In terms of that exposure, we're not playing the same copycat game as all the other treasury companies. Our exposure is using very smart derivative and other strategies to maximize the leverage over our position at a very cost and capital effective way. That enables us to have 100 times the exposure for 1% of the cost. So in simple terms, if you invest, or we have new investment of £1 million into our strategy, we can gain exposure using sophisticated strategies over 100 million of digital assets on the upside, while protecting the downside at the same time. So we're combining our core lending business with a strategy that is extremely capital efficient. So with a company with a market cap of 3 or 4 million, being able to gain exposure to 100 million of upside, we think is a very attractive proposition. So it's not only 100 million of upside on the digital asset side, it's 100 million of upside over a business that can generate and has generated 60% returns on its lending portfolio. So if you look at some of the other companies in the space who have been provided with 200 million of investment, in our case, we wouldn't just use that 200 million to go and buy Bitcoin, which other companies have. So then you're just fully exposed to Bitcoin. Bitcoin goes up, you might make a little bit of money, although you're diluted by paying a premium to the net assets. If Bitcoin goes down, you'll lose a lot of money. For us, our strategy is over a diversified portfolio of digital assets, which is where we think we're at least 2.0 in the strategy, giving you exposure to Bitcoin, Ethereum, XRP, Solana, and others, including likely a gold-backed digital asset, and maybe Tau. It's been recommended as a sort of AI-linked asset that looks quite attractive. So you're getting exposure to all of them. You're getting exposure on the basis of the upside and the downside. So if we were to deploy, and we will deploy, £1 million into our strategy, as we've said, before the end of December 2025, if Bitcoin was to go to £1 million or dollars over the medium term, for 1 million of premium in our strategy, we would make approximately 68 million of profit for a company that's capped at only 3 million. That's our exposure on the upside. On the downside, with 60,000 level puts, if Bitcoin was to collapse, we would still make money and more than cover our investment. So we're doing it very strategically. We're doing it in instruments that are not available to the normal retail or other investors. We're doing it at an institutional level that has strong barriers to entry, that unless you have the experience in trading or derivative products that I have, then they will not even allow you to purchase these assets. You have to first, before you can even buy, you have to purchase Bitcoin, send it to the exchanges, convert it in the exchange before you can buy these long-dated call and put options. So, questions have been raised about people simply copying this strategy. That is simply not possible. In addition, there are restrictions around both companies and individuals doing this. People in the US are not allowed to do it. In the UK, not allowed to do it. Japan, Canada, UAE, various companies have restrictions, which don't apply to myself or our Mauritius 100% owned subsidiary, that is the company that is enacting this policy to the benefit of shareholders. We've had full legal advice on all of our activities all the way through. We've been very clear that we will maintain our core business activities, which has been a sensitive point with exchanges about not wanting simple companies just to buy digital assets. We have a path forward to maintain our asset and revenue position in our core, highly yielding 60% revenue business, in addition to providing potentially extremely large 100 times upside exposure over our digital assets. We tested the systems. There was a lot of shareholder pressure, and I do understand shareholders and apologize for delays in implementing it. But we did have a position or take a view internally that with the collapse of the digital asset Treasury 1.0 market, that there would be less natural buying into the crypto assets over the last couple of months, which has proven to be correct, with 40-50% corrections in Ethereum and XRP and others, and Bitcoin at 3-4 month lows. We have been very patient and strategic. We waited. We bought our small position now, testing everything, making sure it all works. And now 24/7, we can take advantage of price corrections. We can buy, and we will buy, but we'll buy at opportune times. I personally sold out of my entire funds management business with all of my clients, which people can verify, on the 1st of July 2007, with the last lot on the 31st of December 2007. I took a position that we were heading into a very dangerous time. Global financial crisis hit in 2008, and I successfully sold out the entire position of the business in derivatives, making investors 500% over a short period of time. We took this position with our experience in the last month or so, combined with getting everything set up, and we believe there is likely to be a further correction over the next few weeks, and we want to time our entry for large volumes to take advantage of that. We've entered the market, we've taken our position, we've proven the plumbing works, but we do ask that investors be a little bit patient and acknowledge that we have actually purchased at 3 and 4 month lows and avoided those large declines that would have happened. So we expect to be fully deployed for the end of December in our strategy, and then be ramping up our lending strategy and moving forward. And as I said, with a number of other exciting developments on our core business that we'll be talking about soon. Final point, we're actively seeking acquisition opportunities of weaker players. We think that shareholders and people have worked out that the basic buy and hold, raise money is not working anymore, even the market leaders in the US and elsewhere. So these companies have been able to raise a lot of money, acquire some good digital assets. So we think there'll be an opportunity to buy those companies at a discount to their net asset value, sell off their basic core Bitcoin, close down their underlying businesses that are not attractive or nowhere near proportionate, and deploy those funds into our company. So I'll finish on that note. We're very, very excited. I'll now answer the questions that we have. The first questions. We have a question. Good morning, Paul. Have you looked into buying Tau BitTensor as a digital asset? That would be a great asset within the digital asset treasury. Yes, we have looked at that and appreciate the feedback from shareholders. So I think I mentioned that before. So we're not restricted to only doing 5 digital assets. So we are keen on looking at a gold-backed digital asset to provide exposure to people who are excited about gold and precious assets and other things, and also have a clear diversification benefit. But we also are actively looking at Tau as a digital asset because it could link very well with our general AI philosophy. Second question, could you please provide guidance on updated timescales to execute the strategy of deploying a material sum into a leverage call option? Based on your earlier guidance, we had expected to already have material call option exposure in place, approximately 1 million at 100 times leverage. Can you share what factors have contributed to the delay? Well, I think I've gone through that question in terms of our market timing, in terms of getting the plumbing set up, and our expected timing of fully deploying by the end of December 2025. So I do ask that people appreciate, as shareholders or new shareholders, that there does need to be a timing aspect to this. We could have fully deployed a month ago and without fully testing systems, and buying at the peak where we could have lost 50 to 80% in our position. So while we could have announced we fully deployed, I don't believe that would have been a smart move. And certainly as the major shareholder, I wouldn't want to be taking that risk. Further question, who writes the options for you? Is there a counterparty risk? So we're not going to give away all the full details on the secret sauce of our strategies and who we're dealing with and so forth. We've already described our custodian who holds all of our core positions. We have interacted with a bunch of different third parties, and we will diversify on the option position. But I can say that our initial exposure is with the largest player in the derivative market in crypto in the entire world. So we think that is a great start to have. We looked at other groups in the UK, but their pricing wasn't anywhere near as attractive. But we believe if you're dealing with the largest in the world, that is a great position. As we deploy more, either in my debt facility or through further equity, then we will diversify that risk, not only over who's writing the options, but also over a second backup custodian, which we've already discussed with BitGo. Another question, do you intend to license your AI technology to third parties or remain a vertically integrated operator? So we intend to keep the technology to ourselves with our new developments and be vertically integrated globally. So there will be, as I alluded to, further news on that side, and I think we'll save that for a further presentation in November to go into detail on that and focus on the digital asset. But we do have some very exciting developments on that front. Next question. Good morning, Paul. If you were to buy a failed Bitcoin Treasury company, how would you pay for it? Well, we would look at it on most likely a combination of equity and debt. We have listed, a listed equity company listed on Aqueous, but we would look, if we're doing that, to be at a substantial premium to our current valuation. So we wouldn't be interested in using our equity at, for instance, 1p to go and buy a company at 20p, 40p, 50p. We'd be looking at it in terms of shareholders seeing the synergies and the advantage of our strategy. So if we were to do a script-based offer, we would be offering our shares at a much higher premium, and with the understanding that shareholders, once they get our strategy, would be happy to take shares at a nominal lower valuation compared to where they are, but seeing the short to medium term future and the massive upside. So, for instance, if a company had 200 million of Bitcoin, then a company, if we're capped at 3 million, we wouldn't be offering 3 million of equity. So we would be looking at structuring a deal where we're sharing that upside to where people would go, well, wow, if we swapped our shares into Amazing AI, then if that 200 million was deployed into 50% into this sophisticated strategy, combined with 50% into a lending business at 60% revenue, generating 30 million potential net profits, then we should be sharing in that upside. And by combining those two together, we could create a potentially multi-billion valued company. So it may be that other treasury companies may be looking for an exit or a way to escape from this sort of down cycle of raising, Bitcoin treasury falling and sort of no way out. And there could be a lot of potentials there. But we're open to all of those aspects. There are debt funders who would be interested in acquiring assets of failed Bitcoin treasury companies, effectively stripping the assets and deploying them into much more effective assets. Next question. How do you intend to update shareholders on the options performance? Will we have monthly updates? Yes, the plan is to be updating as it goes on a net asset performance basis without giving away specifics of the actual options so that people aren't front running our position, but we would be looking at monthly or at least quarterly updates. And as I said, the key update would be the end of December, when we would have fully deployed all our current existing capital. Next question. Will your 5 million loan be used purely for the loan business, or do you have planned to use it for digital asset option strategy too? If so, roughly what percentage? So we're finalising advice on that point. At a minimum, we'd be looking at 50% of it being deployed into our digital asset strategy over the short to medium term. So that should be a real boost to the strategy. If we deployed 2.5 million of the 5 million loan, that would be 250 million of extra exposure under our strategy, and 2.5 million into lending at 60% interest rates. So we're waiting to finalise legal advice as per RNS that we put out regarding that loan. But we certainly want to maximise the upside in the overall company and take advantage of recent price falls to optimise. I think that's all the questions.
That's great, Paul. That is correct. You have addressed all those questions for investors today. So thank you very much indeed. And of course, the company can review all questions submitted and will publish those responses on the Investor Meet Company platform. But Paul, before I redirect investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Yeah, so a closing comment is I believe that investors should look at the overall position of our company. We want to make sure people understand we're very, very different to the other players in the space. We've optimizing our capital very strategically. We have a core business that can easily deploy capital to meet proportionate requirements that exchanges want. So people shouldn't bundle us into the general group. I think you should deep dive into the underlying business, the advantages we have, the experience we have, and our proven track record. So I hope existing investors stay along for the ride and some new people join us. Thank you.
Fantastic, Paul. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Amazing AI PLC, we would like to thank you for attending today's presentation, and good morning to you all.